So we're going to have a quick look at oil. But before we have a look at oil, anyone who was on YouTube, anyone who was on any of the platforms, let me know, and just click on either the subscribe button down here or the follow or like. And like I said before, if you have any sort of questions or stocks or anything in particular you want me to go through, just pop it in the chat group there on YouTube, and I will do a little video for you guys and just pop it up. All right, so don't be afraid to ask. Anyone live, you can ask what you want, but I'm just going to go into this now very, very shortly. So oil, we'll start with oil. So we looked here at this level at 76.59 level. So we were looking at this area here for price to come back and retest. Now, where this level has come from is here, bounce. Okay, so we're looking for it to retest. There's a really nice, strong level at this particular point, and the price didn't come back to this. So this does not mean that we've missed out. Okay, this does not mean that we've missed out. It means that we now go hunting for a trade. Okay, so one of the things that I always teach people is phase one and phase two. So there's phase one, phase two, phase one, phase two, phase one, phase two, phase one, and this is phase two. So we wanted this phase two to come from here down to there. It started going up and then drop down. Yeah, no bothers, Mario. So we dropped down to here. So and then once we get to this particular point, what we're doing is now we're in phase one. So this means then we theoretically are looking at the beginning of this phase one. We're looking for the market to continue to go up. Okay, so we're looking for it to continue going up. Now, there's a couple of areas that we need to take into consideration. One is this level here at the $85 mark. So the price went up, hit there, and then dropped. So I'm going to grab this line here, and I'm going to drop it right there at the top of that $85. Now, I know that that is the record high. So it means then anything in between this level, anywhere between this high and this low is called early phase one. So this is early. Okay, this is what we're looking to do. We're looking to continue with this. So if we go into here, this is early phase one. Okay, so this is early phase one. Anywhere between this high and this here is early phase one. Anything outside that is late phase one. Okay, so anywhere out here, I do not want to be trading. Anywhere from here up, I do not want to be trading. Why? Because we're in no man's land. Anywhere above that, in that blue box there, we don't want to be in because it is in no man's land and we can't predict where it's going to go. Okay, we can't predict that. But inside this yellow box here, we would anticipate that the market will continue doing what it's doing. And why we're anticipating this is because of the overall direction or trend, because the overall direction trend is going up. So we would expect the market to continue doing what it's done before. That's all we're expecting. So how do we then make money in this? How do we then jump down and drill down into making money in this? So the idea is to drop down to the smaller time frames. Okay, so drop down to the 4H. Unfortunately, that doesn't stay down on the 4H. I have to put it all in. So if we drop down here to the smaller time frame, go down here to the foreign exchange or down to the 4H chart, we now see that the overall momentum is going up. So if I zoom out and show you the bigger picture again, we know that on the daily chart that this was, I'll change it. So this was the phase two. So from there, Come on, annotations. There we are. From there to there was the phase 2 from the higher time frame. That was the higher time frame, phase 2. So what we're looking to do is we're looking to trade the higher time frame, phase 1, which I want to change out to blue. So we're expecting to jump in this, the higher time frame, phase 1. And what we want to do is try to get in at a really nice area. Okay, so that's all we're trying to do. We're trying to get in on this as the overall momentum continues going up. So what we have to do is we have to make sure we're looking in the correct areas, make sure we're looking at the right market structure. So one of the things we have to do is try to find out this is a phase 1 going up. Now, when we have a phase 1 going up, we need to have a phase 2. So we have to try work out where this phase 2 should come back to. Where do we think this phase 2 would end? Now, if I grab segments here, I change the thickness of it, and then right here, put a level right through here. Does that look like a decent enough level? And what I will do is I will pinpoint it there a little bit for you guys so you can actually see it. So we have a bounce there. That's 1 touch and rejected. 2 touches here. 3, 4. So we're not finished yet on this. We're not finished yet. We still have to have the market doing a little bit before we trade this. Okay. So what do you think the market would have to do before we trade this? Before we can jump in and trade this, what do you think would have to happen for us to place a trade on this? What would, in your opinion, what would have to happen for us to take this trade as a long? For us to jump into this market, for us to be looking at this as a way of trading, where and how? So someone said bounce off the trend line. Someone said bounce off the horizontal level. Anything else? Because the idea is trying to get this structure in your head first. And then once you have the structure in your head, then you can actually start anticipating. You can start, instead of jumping into the charts at the wrong time. Okay, so I can see that there is a lot of different answers. There's loads of different. Okay, cool. So what I'll do is I'll actually draw a scenario out. So I'll draw a scenario out. So we actually have we have a selling day. So we have a selling bar like that. So the next 4-hour bar is a selling bar. So are we happy with that? Are we happy with that particular scenario? Are we looking to jump in on that trade? If that happens. So yes or no, Y or N, yes or no. So we're having a few yeses, we're having a few no's. People at the minute are a little bit, we're probably about 60-40 in the yeses towards the no's. Okay, so some people are saying not yet. All right, so if we get another bar that does this, I'll change that to a line. And then we get that. Would that be a good trade? Would that be where you'd be looking to trade? Super, yes. Okay, so everyone seems to be quite happy with that. Everyone seems to be pretty confident with that, okay? Now, my question to you guys, okay, because To me, this is wrong. To me, this is wrong. See the structure in that box there? In that maroon box that I've just highlighted there, what's the structure? So everyone has said to me ranging, sideways, consolidation. So why would you be happy to take a trade when you have sideways, ranging, and consolidation are all the words that you guys have all seen? But when I was asking you questions, because we're dumb retail, Alistair, that made me giggle. That made me giggle. You're far from dumb retail, but you understand the point. It's like no one said to me here. No one said to me here that this is consolidation. So for me, this whole structure here is wrong. Now I'm going to show you what I would like to see play out before I would like to see that trade. Okay. Sideways, but we convinced ourselves that's a phase 2. Well done. That's exactly what people do. So for me, what I have to see happen here, because I don't know what you saw me, I had a trend line here already because I expected you guys to get it, is so the phase 1 started here. Oh, I need to put that back where it was. So the phase 1 started there. I need that to go up. Now, I would probably want it to go up to about there. Why do I want it to go up to that point right there? No, not to show momentum. Why to that point there? It will show momentum if it goes up to there, but there's a particular reason. There's a particular reason. No one has given the right answer yet. No one has given the right answer yet. Let's see if you guys can see it. Can anyone see it? I even have the line there in place for you guys so you can see it. Don't make me draw it out for you. Sam, a little more, I need to be a little more detailed, Sam. I need a little more detail there, Sam. Can anyone? Carol, you'll need a little more detail there as well. I need a little more detail. Nope, no one has got it yet. You guys should, this should be jumping out at you. I'm actually quite disappointed. I'm very disappointed. No one still has got it. I'll put that back there. What's that called? What is that called? A double top. A double top. So that's what I want. That's what I want to happen before I'm looking to place that trade. I need a double top to happen. I need that double top to happen. That's what I'm looking for, because I want the sellers to come in and push that back down. I want the sellers to come in at that particular point and then push it back down. Now, I'm just using logic. That is the next logical place that the sellers will jump in. Now, it could also be there. Literally could be on this point. But that's the next logical place that the sellers will come in and push the market down. Now, when the market comes down to there, yes, then we want to see this low test bar. At that particular point, we then want to see our low test bar. That's where we want to see that. We want to see our low test bar pop up like this, and then we get our little wick on the bottom. But this structure here has to happen first. I'm not jumping in on this consolidation. I'm not looking at this consolidation. If If we're trading this consolidation, we have to trade this a different way. Okay, so then I'm waiting for it to go up, then come back down, and then go again. So let's have a look. I will trade this consolidation. Okay, so we have found the level. So we found the level here. I'm going to go rid of all the drawings there. So can everyone see the difference in the two types of setups? So this is the consolidation, but this is what has to happen for me to break and then retest before I'm looking to take that trade. Okay, that is the difference. I'm waiting for that proper structure, and then when the structure is there, I will take it. Rather than jumping in on trades and you getting triggered in, triggered out, and you're like, damn it, why am I not triggered into this trade? Why did I get stopped out? Why did I get triggered in and stopped out? So if I clear all those drawings, and I'm going to get rid of, I'll actually move them out of the way. So we have this consolidation here. Okay, so just say we have one or two more bars. So we're going to draw in those one or two bars that we have now. We'll stick in a red bar there. Okay, so a red bar right there, and we have a little wick on the bottom of it. Okay, so you guys want to trade consolidations. All right, that seems to be that's the gist I have got from you guys. So how do we trade that consolidation? What do we have to do? When we're trading it, when we're trading this consolidation, what do we do? What are we looking for? How do we trade that consolidation? So someone said trade to the center. Someone said buy at the low points and trade somewhere in the middle. But remember, no, when we're talking about consolidation, unless you're looking for 5 or 6 pips, unless you're trying to scalp, that's not what we're looking for. Draw a secondary line down. No. No, not a secondary line down. So when we have this consolidation, what do we have to find? There's 2 points we have to find on any consolidation to confirm it's a consolidation. What are the 2 things we have to find on it? Support and resistance. Perfect. So if I just take this one, because we have it here already, and I put it there, what have we now worked out? We've worked out the top and we worked out the bottom of this. All right, so that's the first thing we have done. Now, we expect this to go up, okay? The overall momentum, the daily chart told us that we expect this to go up. So what we're looking to do is we're looking to trade this as a buy, okay? So how would we set our trade up? How would we trade this at the present moment? You have two ways of trading this. You have aggressive and you have passive, if that makes sense. Okay, Alistair, you're correct. We'll look for a break above the top. But Alistair, because I'm now letting you guys tell me how you would trade it, I need a little more detail than that. Okay, so you're because I said I expect the momentum to go up. I want clear analysis. How to? Well done, Shane. Well done, Shane. Well done, Shane. Anyone else get the correct answer? So what Shane said to me is we put an order above the level. So what we would do is we would put, I'll change it as blue. So what we do, see this line here, see this, the top of this. I want it to be a little bit above the top of that. So I would put an entry order there. Blue. My stop loss will go there. That is how you trade a breakout strategy. And we know that this could go up. We know this could go up, hit there, come back down, 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 and then break up through it. That's the highest probability. Or what may happen is it pops back up there and then breaks down. But we've never been triggered in because our entry was above the previous high. So they're the two sort of scenarios with it. So yeah, the double top scenario, but the idea is that when the price hits here, even with the breakout, we will probably get a breakout to there. Then we would more than likely get it retest back to here. And then go again. And then, so that would be the structure that we'd be looking for. And then it would come back and it would ideally retest here again, come back down, and then we could get another entry in it. So that's the idea of the market. That's the structure we're looking for. Now, we're never going to get a structure as clean as that. But look, this is the first scenario that we're looking at. This double top coming back to here, that's a second scenario. Then if it breaks there and hits there, that's a third scenario. So you're looking for either of these scenarios. And if any of them pop themselves up, we now have a trade on the smaller time frame, which means that we have a nice take profit before it hits this level, before it hits that level. Okay, so that's the idea. So it depends on which of these. Now, we're only surmising that this one appears, but we might get this one, or it may be this one. So the idea is to have 3 or 4 scenarios so you know exactly what you're expecting to happen before the market happens. So that means then you're not jumping in on fear of loss. You're not jumping in on trades for the sake of them. You're taking good trades, and that's the idea of it, is that you're making sure that the trades that you're taking meet the criteria instead of just jumping in on absolute crap. And then I'm looking at your trades and you're going, why did you take that? And you're going, I'm not sure, Henry. Okay, so that's one way of trading. That is one way of trading the breakout. Okay, and this is the passive way. Okay, so this is the passive way. I'm now going to show you the aggressive way. So there's our entry, and then there is our stop loss. I'm going to change it to pink. Now, there are a couple of other ways of trading the likes of this, but this one is probably the best one. So we have a consolidation. What we would do is we would put a limit order somewhere around there on the just above the bottom of this, range. Now, again, we never know that this is ever going to come back and hit it. But once it's back here, you hit that. Now, the other thing that we would do is we would go get an average true range. Okay. So we'll go get an average true range. We go to here, we go to studies, average true range. So studies 1, and then you have the average true range here. And then I have it over a period of 14. I actually like to have a period of 50. Now, what this means over 50 periods, and this is a 4-hour period. Okay, so this means over 50 periods. Okay, so this means over 50 periods, we have over here. So look, this is at 0.85. Okay, so this means that this is 85p is the average movement. Is the average movements here on oil. So that's the average movement over the last 54-hour bars. So 0.85. So that's the average movements here on the likes of oil. So what we would do is we would potentially put the stop loss 0.85 below where the current price is. Now, I know some people who put the 1.5 ATRs. I know some people who put 1 ATR, some people put 1 ATR, but a little bit more, so on and so forth. So I'm going to delete this so that the chart goes back. But we know 0.85, 0.85 below is where the stop loss should go. So to make it easy, we could just put $1. Okay. Make it very easy. We could just put $1 so that the maths will be nice and easy for us. So if I press the X here, get rid of it. Now we know that at this particular point, our stop loss is here. It is at 80.83. So we only go to 79.83. So it means then that our stop loss is there on that. So that's where we would put our stop loss. So if I get my little arrow again, pop it down here, go somewhere around here where our stop loss was going. So there was the entry, and then there was the stop loss. So the idea of the average true range, it works out the last 50 bars. And why I say 50 is I'm counting all these bars, all the last 50 of them, and it'll say the average movement in the bars. So we can see there's a big, huge one here, and there's a little tiny one there. There's a big, huge one here, and there's a tiny one in here. A big, huge one again, and a small one. So what happens is it divides them up, adds them all up, divides them, and then it comes out with an average movement. Now, again, we're talking about the best case scenario. So that means where this is where your stop loss will go on this particular one. And then if it runs, we can see that by looking at this, we'd probably have a 3.5 to 1 before it hits this area. So has anyone got any questions there on any of that? How to use the likes of the breakout, the different ways of trading it, how to potentially use the average true range, how to actually implement a strategy and understand the way we're trying to optimize our trading. Okay, because remember, the idea is that we have an entry on the daily chart. We were looking for it, and it didn't, what would I call it? It didn't trigger us in on the daily chart. But that doesn't mean that we miss out. Or what we do is we can go from there. So, well, the take profit on both of them are here. Now, when I say aggressive, this is a little more aggressive. It's again a little bit passive aggressive. If you wanted to go really aggressive on this particular strategy, what you could do is get rid of these two. You wanted to go really aggressive on this particular, and it's a different entry. You would put your entry above the last bar here, and you would have your stop loss where the blue one is. And that means then you're hoping that these pub bounces back here don't trigger you out. And that would be the really aggressive one. Okay. And again, if it went up 1 to 1, you would par close position and then let the rest of it run because you got a little bit lucky down here. But yeah, once you get out of this consolidation period, generally they run. Okay. Generally they run. So there's three different entries on the one makeup here. And again, there's more than one way to skin a cat. I will teach you stuff how to trade. I will teach you simplicity, trend, all that sort of stuff. And I will keep it nice and simple. But just because I keep it simple doesn't necessarily mean that I don't know how to trade any of these and that I don't trade these. I sometimes do. I trade the likes of these as well. But the idea is to get you guys across and teaching you guys how to trade the likes of that, how to jump in and how to actually maximize, how to actually educate yourself on the likes of this happening. And if it does happen, then you have that string in your bow to actually jump in on it. Can we discuss par closing for a risk-free trade? Absolutely. So I'll actually pull up the trades that we have running. So we actually have Morgan Stanley running. Well, if we haven't been triggered out today, we will have a look at it and we can actually talk about that because we have ones par closed on Morgan Stanley and we have ones that are not par closed. So MS. So Morgan Stanley has become massively annoying at the minute. Okay. Why? Is because it's up one moment, it's down the next, up one moment. There's a horizontal level that it keeps rejecting. Now, what we could do is we can still trade that. We can still trade it if it comes back to it, but we'll have a look. If we look at this CFD here, this one is part closed. This one is part closed. I've moved my stop loss inside break even. I've moved it up to 171 win. And I've taken half the position off the table. So this one theoretically should be 426. And this one is also part closed and my stop loss is moved. So which means then that this one should be 322 quid. This one is the full stop loss, the full trade still there running. So it looks, I still have the full 100 quid on it. I'm still risking the full trade. So if we actually go to and have a quick look at it and have a look at the structure and have a look at the chart, and you can tell me how we could have traded this as it was running along. So change that to a daily chart. So here is our entry. So there's where we enter the trade. So entry on the top of that line, stop loss here. So we can see that we are overall trend is up. Now, is there anything we could do here to actually make money on this particular trade? Trade the consolidation, absolutely, Thomas. But how could we trade this how can we trade the consolidation? Right, well done, Ash. There's a triple top at the top. Well done. What we'll do is we will get a segment here and we'll pop it in and we will go about there. So we're trying to get a line of best fit. So a line of best fit there. So we are getting this here. So we're classing that as a bounce. This is a bounce. This is a bounce. And that's a bounce. So there's 4 touches. This here is all part of that one touch. All these touches, 1, 2, 3, 4, 5, 6, 7. They're all part of that one touch. So there's 1 there, 1 there, 1 there. So we have 4 touches. And at the bottom, we have this is classed as a touch. This one is 2, and this one is 3. So basically, how we would trade this is, so rather than me telling you how to trade this, how could you guys trade this? What could you do to trade this? Same way you did with oil. Absolutely. Trade from the bottom into the center. Absolutely. So what we could do is I'm going to get a channel. Now I'm going to make this up rather than actually work it out. So I could put a limit order like that on, couldn't I? I could go get the average true range. I could work out the average on Morgan Stanley. It'll tell you in monetary terms what's the average range is. And there's my entry, and then there's my stop loss. So I could put that limit order. Now, can anyone tell me why I put the limit order right there? So my entry would have been at 97.14. So can anyone tell me why the entry was there? Next support level. No. Cassie, spread. Okay, I took the spread into consideration, Cassie, yes. But there was something else a little more important. Henry said previous touches. Henry, you're nearly there, but I need to be a little more detailed. What do you mean the previous touches? Because of the existing trade? Nope. Triple bottom? Nope. I see I've it above the triple bottom. Eduardo on manipulation? No. Can anyone tell me? Minus the wicks. Well done, Carol. Minus the wicks. So if you look at that line, that is where the close or the open of the other bodies are. So the bodies of the candlestick. So if you take the wicks off, those, that is the actual area. All right. So instead of having it on the bottom of the wicks, I have it where is the area of the bodies of the candlesticks consolidate. So nothing to do with the wicks. So that's where my entry is my entry is at 79.14. So I'd have it on the wicks or the bodies, not the wicks. Okay. So we have our stop loss then at the average true range, and we could trade that back up. Now, I would never be looking for in a normal sideways market. Now, remember, we're taking this into consideration. We're taking this. So we'd be looking to take this trade. And this is a trade that you guys could actually place if you think Morgan Stanley is going to continue going up. But that is a potential trade there, entry there, average true range, stop loss here, and trade that up. But if I'm trading a normal consolidation, I would be looking to get in here and get out there halfways. But forget about this trade for a minute. Okay, so forget about that trade. You already have 1, 2, 3 trades on this at the minute. Is there any other way we could have traded this? Is there any other way we could have traded this? Can anyone else tell me any other way we could have traded this trade? Okay, someone said lower time frame. Someone said shorting it, but be more specific. Well on. Yeah, night. Shorting off the resistance. Well done. Shorting off the resistance. Pivot points. Nope. So see our high here. So see this up here. Now, if we look at this, I'm going to move this. I'm going to move this for a minute. And this means that we were actually a 1.1 up. So at this particular high, I probably had, say, I risked 100 quid. So I probably had about 120 in the kitty here. So at this particular point, I had about 120 or 30 quid. So what I could have done at that particular point is see that last green bar. So the last green bar, so that one right there. So we're going to zoom in here. So the last green bar. So the last green bar there, I can see that it's hit its head once, hit its head twice, hit its head 3 times, and it's now touching there. Now, I expect the market to continue going up. But I also know that this has gone sideways over the last month. It has stopped moving. So there's a little bit of concern on this a little bit, okay? Whereas I could now bring that down to about there. Let me see. Nope, on that a bit higher. Now, if you see where my stop loss is, I'm making sure my stop loss is above these, okay? I'm making sure my stop loss is above those. So now I have an entry at the bottom of this and a stop loss above this, okay? And what I can do is I can short the market here. So, and look what happens, it starts to go down. And as it's going down, so remember that the winning trade, so remember this trade here, this trade was up 110 pounds. Now, all I'm doing, I would have a short here. And the 110 pounds that was in this trade here, all that would happen is it would move into this other one. So basically, anything that was in this one would just transfer into the other one here. So that's basically what we're not making any more money. All we're doing is this trade, because we're expecting it to go down. So it's now at 9 quid. So we would actually have in this the fourth trade here. So we're pressing the short button. We would have 110 pounds in this short trade here. Whereas this one would be down -9. So which means one would cancel out the other trade. So one would cancel out the other trade. And that's how we do it. So that's, does anyone know what that's called? Can anyone tell me what that's called? Hedging, flipping, gearing. Well, on Tyson, it's called gearing. It's called gearing. Okay, hedging is when you have two different assets. So gold versus US dollar. So gearing is the actual proper name for it. So if I actually get another channel here, actually get the measuring tool. So there was the entry there, and the stop loss was here. So that means I'm risking 2.9. This actually went down as far as 4.8. Okay, so this actually went down to a 1 3/4 to 1. Which means that you could have, once it got down into this area here, you could have actually traded your stop loss, you could have closed the trade, or you could leave it opened. So at this present moment in time, you are 1% up. So you've risked 100 quid here. You've actually made 100 quid here. So the only difference in the other trade is down 9 quid. And you've made 100. So overall, you're actually plus. You're still plus by doing that. And that is called gearing. And that's something that you can do once you find a trade that is geared, that side moving sideways. But the best way to do it is from the bottom here. You have to be very confident of this level to gear it and short it. And then sometimes when you place this entry here, it just continues going up. Perfect. Then it never triggered you into the trade because we're using the bottom here. I would never use a limit order on this here. I would never use a limit order because with the limit order, I'm in the market as it's going up. I would always use the stop orders, which means that I have to get triggered on the way down. I get triggered on the way down. But again, you have to be confident that it's going to go down. What sometimes happens, you get triggered in and then it turns around and goes up. So what you have to do is you have to cancel then the short. Once the short breaks this high, that means you cancel, you get out of the shorts very quickly, okay? If they're wrong. So the problem with par closing a trade, is, see this one here? So see that first trade here? If we go back, we now have 213 pounds on that. That means then that if that trade had been left alone, it would have been 426. Been 426. Now there's good and there's bad with that. It means then that you are only getting half of the upside. So if this continues to go up, I'm only getting half of the upside. I'm not getting the full upside of it. Right? That's the negative part about closing that. The positive part about par closing is that I have no downside whatsoever. There is zero downside for me on this trade. So see the stop loss? I have now moved all my stop loss. See this line here? All my stop losses are at that particular point. So that means then if this one here loses, it means I'm out of all of these trades. I'm out of all of them. And then once the market sort itself out, I will then recalibrate and see what we're doing moving forward. So how to par close a trade? You just click on investment here. See this X? You click on the X here. And in the bottom left-hand corner, it says par close a position. So if you click on par close, it will then tell you how much of this you can close. So look at this, 460 pounds. It's saying I can close 50% of it. But again, if you look at this, the minimum you can close in a trade is 50 quid. So you can only close the minimum lot size. So eToro's minimum lot size is 50 quid, which means the smallest part of a trade you can close is 50 quid. So if the trade is not bigger than 50 quid, you cannot par close it. So you guys have entered in wheat. Let's have a quick look at wheat. Okay, so from looking at our analysis here, segment, we don't actually have a trend line here. Okay, I thought we might have. So does that look like a good trade at the moment right there? Does that look like something we would be interested in? Right there. And the idea would be is the entry above that small bar. So there, and a stop loss below that small bar right there. You missed it. Well, the trade is still valid there. The trade is still valid. The entry. So today's bar, the entry is still valid. So to me, the entry is still there because, and why it is still there, because if we look at the price action here, so if we zoom in, and I move that up, okay, because it's now got bigger. Clear all drawings. So if we look at this here and zoom in, see this bar, it's still below this entry. So this bar at this present moment is still below. So the idea would be is the channel. So we would be entering above that bar here, and a stop loss would be below it. So that would be the entry and stop loss. So the entry would be around 773.38. Okay, so that is something that I was about to check. So Boyan has just said, looks good, but the seasonality calendar suggests wheat does not do well in November. Okay, so if anyone can get me the figure, so rather than me looking at the calendar, so what's the biggest change in any of the months, and then what is this month's change? Okay. So is that trade valid? Absolutely. Of course, that trade is valid. It is definitely a valid trade. Is the overall momentum up? Yes, it is. So this month has done minus 0.47. Okay, perfect. And what is the biggest change in the months in the last year? What was the biggest one on the seasonality? 3.22 in August. Okay. So compared to the biggest difference, it's not huge. Okay. No, I understand. And it just saves me clicking on it. So 3.22 is the biggest one. And this is 0.47. Okay. So 0.5%. So we get a 0.5% movements in November. Now, the difference is that have we already had that 0.5% move? Has it already moved? Okay. That's the question. So if we drop down to the 4 hour, some people were looking at the 4 hour. This is not something I would trade in the 4 hour, but let's have a look. So on the 4 hour, we have a potential beginning of the phase one to the upside. Now, some people will look at that and go, well, Henry, there's the left shoulder, there's the head, there's the right shoulder, and here's the neckline. Some people will see this, looking for this to kick down there. And there is the neckline. Some people will see that. And this is the beauty of trading. This is the beauty of trading, is that both of these examples are correct. Both of these examples are absolutely correct. It comes down to what your technical bias is on this. Are you a trend-based trader, or do you think that this, with the seasonality calendar, with what we're seeing here on a smaller time frame, that this is going to change direction? Now, Marius popped something up there. He says that the contract finishes on the 25th of this month. Okay, so be aware of that. Hopefully the trade matures before the 25th. So that means you have 16 days in this trade before the new contract comes into play. So looking at the 4 hour, would you guys be looking at this as a short? Or are you looking at this as a break and retest of this level, going up and then coming back down? And you're then expecting it to kick off to the upside like this. And this is the beauty of trading, is that I have no answers to that. Could not tell you. I have no answers to this. Now, the problem is for me on this particular trade, the only negative I have about this particular trade here, I go back to the daily chart. Is that we're in a zone rather than a particular horizontal level. We're in a zone rather than that. Now, phase twos look fairly uniform. This one's a little bit deeper than that one. So the phase twos look all right. The market structure looks all right. And this will probably pop to the upside. But the structure of this here with this horizontal area, the zone, is not correct for me. So that's the only reason I would not take this trade. But it meets the rules, it meets the structure, yes. It could double top and fall, absolutely. It could come up to a double top there and fall, absolutely, it could. There could be, absolutely. But that comes down, what's your risk management at that particular point? Okay, everyone, it's been an absolute pleasure. Anyone who hasn't jumped in on my free course, jump in on my free course. Anyone who is not in on the free Discord channel. So this is the Discord channel that we run. Anyone here, so traderstream.com, we'll go here. And this is the beginners chat room for anyone who wants to jump in on it. Myself and Ben talking about stuff, so on and so forth. Anyone who wants to jump in on that. Also, we have the likes of the free content that we put up. So anyone, there's loads of free stuff for people. Anyone who wants to jump in on the paid stuff, all you do is go to henry-ward.co.uk and then you jump in on that. But look, YouTubers, anyone who was on any of the social medias, Instagram, or you're on Naga, whether you're on eToro, whether you're on any of them, you want to follow any of my stuff on YouTube, just click on the subscribe and like button. And if you have any questions, pop it into the chat and I will go through it for you guys. Look, it's been an absolute pleasure. Thank you very much. And I'll speak to you tonight, anyone who's in the boot camp, and I will speak to you on Wednesday. Come on, you Irons. Do you know what I mean? That was brutal. I was at the Liverpool West Ham game, and I don't like that at all. That's not nice. See you later, everyone. Bye bye.